Hey guys, on this video, I want to give you some proof, some bona fide proof that money does not have to be complicated. It doesn't have to be difficult and it doesn't have to be hard, right? I want to talk about an allocation strategy that is simple in terms of investing. A way to allocate your money while you're investing that's simple, that's going to help you grow money, and that's going to actually be good for you down the road in terms of building wealth. It's just proof that money is not hard and doesn't have to be hard. And investing is not hard. And it doesn't have to be hard either. Sometimes we think investing your money has to be all these intricate formulas and all these things that are going to be difficult to do and all these math equations, these ratios that are hard to understand. I want to give you the simple 90-10 rule or the 90-10 strategy for investing your money. In 2013, Warren Buffett, in a letter to his shareholders, he described what the 90-10 rule or the 90-10 strategy is. Here's what he told them. He said, if you just invest in this way, you're going to be just fine and you're going to have plenty of money. He told them to invest 90% of their money or their future investments into a low-cost index fund such as S&P 500. 90% of your investment going to the S&P 500. And then 10% of your investment, the other 10%, should be invested in low-risk government bonds like treasury bonds or T-bills. Period. That's it. Even when you get older, typically they say as you get older, your investments should be a little more conservative and your investments should not be as risky and as aggressive as being in the S&P 500. You ought to have a good mix, maybe a 50-50 mix, right? But listen, if you just follow the 90-10 rule, you're going to have plenty of money. Right? So why the 90-10 investment strategy? So think about it. If you believe that over the next 30, 40, 50 years, 100 years, American businesses are going to thrive and be strong, then an investment in the top 500 companies in America, then your money is going to grow and be safe with no problem. Just like America's businesses has grown for the last 120, 150, 200 years. So an investment in the S&P 500 with 90% of your money is safe. And keeping about 10% of your money going towards the bond market, the U.S. government bond market, that's pretty safe as well. Now, why did Warren Buffett recommend this 90-10 rule? First, it was prefaced with the idea that your fees would be low. Fees are something that's really important when you're talking about index fund or when you're talking about investing for the long term. The other reason that the 90-10 rule is safe and okay is because it's sort of aggressive and it has long-term capabilities in terms of growing your wealth. In other words, if you invest in America's top 500 companies in an S&P 500 index fund, in the short term, you're going to see it go down, up, down, up, down, up. But ultimately, over the long term, it's going to rise as it has risen for 100 years or more. Now, don't get me wrong. When we had the great stock market crash of 1929, yes, it took about 15 years after that to recover all of your losses, right? But again, 15 years is a short span in the long-term big picture. Guys, if you're getting anything out of this video, do me a favor and smash that like button below. Also, please share this video with your friends, your family, and your network of people. And if you're not a subscriber to this channel, please consider subscribing to my channel. Now, let's get back to the video. Now listen, if you're older, some people would say you want to be much more conservative as you get older and want to use the money. And some people point to what's called the rule of 110 as a good allocation strategy, as a better measure of how you should allocate your future investments. And what the rule of 110 says is that you take the number of 110 and you subtract your age. And whatever that number is the amount that you should be putting towards the stock market. Individual stocks or index funds or ETFs. So if you're 50 years old, 110 minus 50 is 60. And so the rule of 110 says you should be putting 60% of your money towards stocks and the other 40% of your money towards bonds. Now that's the rule of 110, which is a more conservative rule of investing than the rule of 90-10. I like the rule of 90-10 because me personally, I don't want to be as conservative with my investments just because I get older. I still want to stay sort of aggressive so I can still realize some of those gains. And if I don't realize those gains, then the people that I leave this money for in the next generation or two will enjoy the gains. Guys, I've recently partnered with Mint Mobile, where they offer premium wireless service and they're built on the nation's largest 5G network. So speed is great, coverage is great, and you get unlimited nationwide talk and text. It's super easy to switch over. It only takes about 15 minutes, and it will save you a ton on your wireless bill. Because at Mint Mobile, they cut out the stores and the salespeople, so they don't have to pay for all that overhead like other wireless companies. So they pass that savings on to me and you, and they're able to keep their costs low. I'm a user of Mint Mobile, and I'm a fan. Use my link in the description box below to get started and try using Mint Mobile for yourself. Now, let's get back to the video. So again, the rule of 90-10 in terms of how you should be allocating your money between stocks and bonds, your future investments, is a rule that makes investing simple. It makes investing easy. Now, if you're a person that is very risk averse and you don't want to take the risk of having 90% of your money towards stocks and 10% towards bonds, then you can always do the rule of 110 for yourself. And the older you get, the more money you'll have towards fixed income investments like bonds. Now, you can do that. But for me, the rule of 90-10 makes it very simple. 90% of your investments, future investments in the stock market, index funds, ETFs, individual stocks, and 10% towards bonds. See, money does not have to be, or investing does not have to be overly complicated or something that's very difficult to understand. I think it makes sense, and I think it makes investing simple. And I think it makes allocating your money where you should have your money in terms of your future investments easy. Investing doesn't have to be super duper complex. You don't need a whole bunch of ratios to figure out where I should put my money, where I should not put my money. You can just use that rule of 90-10. Sure, it's a little aggressive, but me personally, I'm okay with being aggressive because I also want to realize some gains. But understand that there's going to be some loss too in the short run, not the long run. Hey, listen, if you got anything of value out of this quick video, do me a favor, hit that like button below. Also, drop me a comment below. Let me know, what do you think about the rule of 90-10? Or do you like the rule of 110 better? Let me know in the comments below. Hey, the best person who's going to take care of that old you is the young you. Guys, do me a favor, take good care of yourself and take care of other people. Until the next video, peace. Guys, I offer one-on-one financial mentoring and coaching. If you're looking to grow your current income by adding additional streams of income, or you simply want to maximize your current income and get the most you can out of your money right now, or if you simply just want to become a better manager over your money, a better steward over your current personal finances, I may be a good fit for you. Or if you're looking to get into the real estate game, buy rental property, maybe manage the current property that you have better now. I got more than 23 years of investing and managing in rental property as well, so I can definitely help you in that area also. You'll find a link to my one-on-one personal financial mentoring and coaching below, along with a link to my schedule. Please feel free to reach out to me, guys. Until the next video, peace.